Hello, welcome to Morris Money, where we give you stock tips in under 5 minutes. I'm your host, Morris Willie. Today, we're talking about if UTZ should be considered a long-term stock for your portfolio. This video is based off a Seeking Alpha article written by Daniel Jones. When it comes to chips and other related foods, one of the most well-known companies out there is UTZ Brands. Recently, shares of the business have generated some fairly solid performance relative to the broader market. This comes as management continues to demonstrate growth for the business driven both by organic means and by acquisitions. Long term, he suspects the future for the business will be still positive. Having that said, the picture today does not look quite as impressive as it did when he last wrote about the company. Moving forward, he suspects that this will be a solid neutral prospect with returns more or less matching what you will anticipate from the broader market. The last time he wrote an article about UTZ Brands was in December of 2021. At that time, he considered the company a solid prospect, but he's now noticed that the enterprise is nothing special really. His overall belief is that the company was more or less fairly valued. This is based on the trading multiples of the firm at the time, as well as the firm's growth. Since the publication of that article, the company has actually outperformed the broader markets, with shares generating a return of about 4.7%, and this compares to a 7.4% loss from the S&P 500 over the same time frame. These financial results should not be surprising if you've analyzed the company's recent fundamental performance. For the full 2021 fiscal year, for instance, the company generated revenue of $1.18 billion. That represents an increase of 22.5% over the $964 million the company generated in 2020. Adjusted for acquisitions, this figure would have been $1.22 billion, down slightly from the $1.25 billion reported 1 year earlier on acquisition-adjusted basis. Profitability is also important to watch here. According to management, net income of $20.6 million beat out the $12.63 million loss achieved 1 year earlier. Adjusted for acquisitions, this would have been $22.1 million, up from the $3.2 million loss achieved 1 year earlier. Meanwhile, operating cash flow of $48.4 million handily outperformed the $29.7 million reported for 2020. The only metric that seemed to worsen year over year was their EBITDA. According to management, this came in at $156.2 million. That compares to the $179.4 million reported 1 year earlier. However, if we adjust for acquisitions management engaged in, this figure would have risen to $164.2 million. That's down from the $192.7 million reported in 2020 on an acquisition-adjusted basis. In addition to having a pretty solid year, management also claims that the near future will also be impressive. For the 2022 fiscal year, management now anticipates sales climbing by between 7 to 10%. This would be driven in large part by an increase in organic growth of between 4 to 6% and coming in above the 3 to 4% range management anticipates for revenue growth in the long run. The rest of the expansion will be related to acquisitions management plans to make. Although top-line performance should be strong, the company does think that profitability will rise only modestly. No guidance was given on this front, but management did say that inflation combined with growth-oriented investments being made by the company this year will have a slowing effect in the near term. Based on this information, it seems like UTZ Brands will continue to grow, but that's not necessarily enough to make it a great opportunity. The company has a solid business with steady expansion caused by both organic means and acquisition-based activities. Long term, he suspects the firm will do quite well for itself. That said, though, he currently thinks that UTZ is a fairly priced company at this point. So let me know what you think below on UTZ, because I like the company for the long term and I'm going to continue buying, but over the long run, I might have to reconsider it as a long-term position in my portfolio. Please don't take this video as financial advice, and thank you for watching Morris Money.